Hey everyone, it's Rachel here. I've never done something like this before, so bear with me. But I wanted to get this out to you guys because I think it's important, and it's always a bummer when things go wrong and could have been prevented. But sometimes you need a little push to do it. So reconciling payroll is very important. I mean, I've seen numerous issues over the years where W-2s don't balance to 941s, or W-2s are published and they're incorrect on the face of them, which causes problems when people go to file their tax return and their tax preparers say that their W-2s are incorrect and they have to come back to you. Most of these times, these issues are not that difficult to solve, but if you don't catch them in the beginning, then they go unnoticed, and then eventually you will have to fix them, or we just cross our fingers and hope nobody ever catches it. But they can be easily fixed if we do it proactively. The other thing that we just try to remind everyone of, and we sometimes forget, but it's important to address shareholder paid medical if you're an S Corp. Any stockholder that's greater than 2% in an S Corp has to have their medical insurance paid for. The company can pay the medical insurance, but ultimately we need to tax it to the shareholder and deduct it on their personal return. So this is just a paper transaction at the end of the year mostly, where we add it to gross wages and then deduct it out, so that there's really no paycheck to the shareholder or anything like that. It just sort of subjects it to federal and state income tax. It's exempt for FICA, Medicare, SDI, SUI, all of the other taxes. It's only subject to federal income tax and state income tax. A couple other things that we try to tell people about to do, and sometimes it gets lost in translation, but we want to make sure that, if the company is paying for vehicles for stockholders, we need to get those, on the W-2 in some way. The IRS knows that no vehicle is 100% business use. Everyone should have a policy in their handbook that says, that personal use is prohibited for anyone using a company vehicle. But for shareholders, stockholders, we need to make sure that we get something on the W-2 as taxable use. We can, if you guys, if you have questions about that, let's talk about it. Ask me, ask anyone else at JGR about how much we should add to the W-2. For employees, it's important if they have a personal vehicle and they take it home at night. Commuting is never free, so you can't pay for the employees commuting. So it's a good idea to have a policy in place, and that there's a commuting rule the IRS allows. I think it's $1.50 each way, and you can tax that on their paycheck at the end of the year, or every week, or every however many paychecks they get. And it's a minimal amount. I think it adds up to like $750 a year approximately, and that just sort of covers your basis if you were to get audited and they ask you, who's driving the vehicles and if they take them home at night. Anything else that you've been putting off all year that you need to fix in payroll, or just if there's any adjustments that need to be made, or any other fringe benefits that need to be added. Obviously, you probably already posted your final payroll of the year. At that point, I think once the final payroll is posted, we're ready to reconcile. And so we should really start with the W-2s, because the W-2s are the annual numbers that are going to get submitted, and we need the W-2s to be accurate before we run the fourth quarter 941. So run them all, print them to plain paper or put them to PDF, print the W-3. First, I like to scan the W-2s to see if anything obvious stands out. So I'll print them out, I'll look at them all, I'll recheck the math on some of them, like taking Social Security wages times 6.2%, check and see if that is there. It can be off on cents, but we don't want anything off on dollars. Check Medicare, make sure there's no Social Security wages over the limit. Make sure that if anybody is being paid more than $200,000 a year, make sure that you're withholding Medicare correctly. Now, if you haven't withheld additional Medicare, don't change it at this point, but be sure to do that for next year. Make sure box 1 is not higher than box 16, or make sure that box 1 isn't higher than box 5, which is Medicare wages, unless there's something in box 12. So, we want to make sure we understand the differences between box 1 and box 5. They should be reported in box 12. Box 1 and box 16 should never be different unless you still have an HSA. And in that case, we want to make sure that California wages are grossed up to include HSA contributions, because HSA contributions are not deductible for California purposes, only federal. If you find any errors, and honestly, if you have no errors, congratulations. There's always something that seems to go wrong in payroll, but it's highly likely you won't have any errors, but it could be something that needs to be fixed, even if it's just a spelling of someone's name, or something silly like that you just happen to notice. Or if when you're going through them, you happen to remember to yourself, like, oh, that employee moved this year, or this employee no longer works here. I wonder if I have the right address for him still. So just doing things like that. Again, usually clients of mine tend to run their W-2s after they've done their 941 for the fourth quarter, and then at that point it's a little bit too late. So if we needed to fix something on the W-2, we now have to amend the 941 to make sure that they all tie out. Okay, again, so now that we think that the W-2s are correct, nothing else needs to be adjusted, now we can print our fourth quarter reports and reconcile these to make sure that everything adds up. We have our quarter 4 reports, we have our W-2 reports. At this point, I like to make a spreadsheet. I like to make a spreadsheet of all the 941s that have been filed. So don't pull it from your system. Again, just go back to your paper records or wherever you saved them. Maybe you have a PDF copy of whatever you sent to the government for each quarter. I like to take those, put them all in Excel, add them all up, make sure that the totals being reported on those quarterly reports match the W-3. So again, we want to make sure that the summarized Excel spreadsheet you just made of all the actual filed 941s equals the W-3. Again, address any issues. They can be off cents but not dollars. Make sure you put FUTA in there, and don't forget the credit reduction, which is the amount that so California borrowed money from the IRS, and they're making employers pay back the IRS via the credit reduction. So generally speaking, everyone's systems that I see is not accruing FUTA at the higher rate. It's accruing it at the lower rate. So most people's FUTA payable accounts are negative, and they also need to make a pretty big payment in January. Some people have been making the payments as they go, but just making sure that we're reporting that correctly. So again, this reconciliation I'm talking about, where you put it in Excel and add it up to the W-3, the IRS does do this for every single client. It's just that they don't do it for like 2 to 3 years from now. So, if they come back to you, and I get this letter a lot, but if they come back to you in 3 years and tell you it didn't reconcile, it's going to be a lot harder to go dig out your records and do it. Okay, so once you've sort of put everything together and reconciled everything, then we need to get the W-2 copies out to the employees. This year is the first year where the W-2s are all due by the end of January. So all your fourth quarter reports, all your W-2s, your W-3, everything has to be submitted by the end of January. My advice for this year is to get those W-2s out as soon as possible. It's January 2nd, payroll's all been posted, we need to get these things out, because the sooner you get them out, the sooner any issues can come back. Now again, if we've done our homework and done the reconciliation and checked employees' accounts, then probably there aren't any questions, but it's always something. Social Security is incorrect, or the address is incorrect. Making changes to those W-2s before they go to the SSA is really the easiest thing, so we want to make sure we can make any changes if necessary. So this year I recommend that everyone files their W-3, W-2, 941, 940, DE-9, DE-9C, file them all on January 31st. prepare them all now, hold them, make sure everything ties out, and then finally submit them at the end of the month. Okay, now we move on to 1099s. And 1099s are important because the IRS requires that you have a 1099 on file and send a 1099 to any vendor who is providing a service that you paid more than $600 during the year, and they are anything but a corporation. So, for example, JGR provides you a service during the year for likely paid more than $600, and we are a limited liability partnership. So you are required to 1099 JGR for any fees that you may have paid during the year. 1099s are on cash basis, so we would only want to report any cash that you paid. So your system generally can track all of these things, but it is important to go through and make sure that you have all your vendors set up. It's a really good idea to have a vendor, like a vendor approval process where before you put a vendor in your system, you make sure you have a 1099 on file, make sure you've gone through and checked to make sure that vendor, when I said 1099, I mean a W-9 on file. You go through and make sure that vendor, is coded correctly for whether or not they need a 1099 in your system. That way it starts to track it, make sure that at the end of the year when you print the 1099s that everyone will require, everyone that needs one will get one. So if I'm going through a client that may not have the best 1099 tracking systems in place, I go through and I check common accounts where vendors who generally need a 1099 might be hiding. So for example, repairs and maintenance. Not all repair shops are corporations. So if you're using like a local mechanic or something like that, they might need a 1099. Also if you're paying any just individual for repairs or anything really, you're going to need to issue a 1099 if they're not on payroll. Outside services is a common account where we find 1099able vendors. So any consultants or type people that you'd put in outside services. Professional fees. So like I said, JGR needs a 1099. Also, any attorneys that you're paying generally need 1099s. Also computer consultants or service providers. So if you're on the cloud, for example, and you're paying a company that's not a corporation, we need to issue them a 1099. All rent paid needs a 1099 issued. So need to make sure we're doing that. And then any interest paid to an individual, so like a stockholder, if you paid any interest to a stockholder, or maybe a related party company that's not a corporation. Okay, guys, that was all I had for you today. Hope that was beneficial. If you do have questions and you want to go over anything, please give me a call. Also, if you want like a spreadsheet like a template to start out with to do your reconciliation, let me know. I can easily send you one. I hope you found this helpful. Thanks, guys.